Welcome to a special St. Patrick's edition of Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth Hole.
I'm Kim Harestad.
I'm Cindy Walker.
And I'm Stacey Van Schenck.
So today, in honor of St. Patrick's Day, we thought we'd give some special luck out there to first-time homebuyers and tell you a little bit about the variety of programs we have that really work well for first-time homebuyers. So Cindy, why don't you start us off with conventional?
Okay, well, with conventional first-time homebuyer loans, we have what we call the Fannie Mae Home Ready Loan. 3% down, and they have income limits that they have to adhere to. I'm going to say, I don't have it like exact, I probably do right here. 58,160. So as long as their income is below the Fannie Mae median income of 58,160, then, and they haven't owned a home within the last 3 years, then they're eligible for 3% down for the Fannie Mae Home Ready Loan, which provides reduced interest rate on the mortgage itself. The private mortgage insurance monthly is at a reduced cost, so it helps them keep overall lower monthly payments. And if they're not first-time home, well, let me take that back. If they are still first-time home buyers, at least one of the members of the family hasn't owned a home in the last 3 years, then we also have a program if they're over that income limit, 3% down still, not the reduced interest rate, typically a little bit higher than market interest rates if they're doing, if they're above median income. But we still have a program for you with 3% down. And the mortgage insurance is a little bit higher too if you're not if you're not below the Fannie Mae median income limit. So Fannie Mae offers two really good, strong 3% down loan programs. Typically require a little bit higher than market interest rate, unlike FHA, which we'll get into. And it's going to be easier usually to get your offer accepted, Fannie Mae versus FHA or VA. So the seller is limited to 3% of the sales price towards the closing cost on this program, but it's still a good program. They just have to do the Fannie Mae framework class for down payment assistance for first-time home buyers, and it's online. It's free of charge, but it's a really good program to get you in for lesser down payment, lesser monthly mortgage insurance, and a little bit lesser interest rate.
Awesome. Thanks, Cindy. And then let's see, Kim, can you share with us VA?
Yeah, VA is a great program for first-time home buyers. If you're, thank you for serving our country, for one. But you can get in with zero money down, and there's just a slight upfront funding fee. There is no monthly mortgage fee with VA. Also, if you are disabled with a VA, you can get that upfront fee waived if you're more than 10% disabled. So that's very helpful. You can also get 4% and up to all your closing costs paid for by the seller with a VA, and come to closing with zero. So that's a great first-time home buyer if you've served our country, and we have those available for you as well.
Awesome. So we talked a little bit about conventional, and then we've talked a little bit about VA. So let me share with you real quickly some of the great points about FHA. FHA program is really, really awesome for those people with, I like the way Cindy, you always put it, less than stellar credit. I think that's a very kind way of saying it. And it's hard, especially for first-time home buyers. So credit scores can go down as low as 580. So that's really awesome as far as an opportunity for a first-time home buyer. We can also do manual underwrites for buyers that haven't established credit. And also we can do FHA loans for people that are 1 year out of a Chapter 13 bankruptcy or 2 years out of Chapter 7. I have notes because I don't want to forget any of these exciting things because FHA is so awesome. 3.5% down, and the seller can pay up to 6% of closing costs. Now, we know it's hard to get sellers to do that right now, but still there's some great opportunities, and FHA also allows the entire closing cost and cash to come from a gift. So, we've talked a little bit about conventional, VA, FHA. Stacey, why don't you give us an overview of USDA?
Okay, USDA loans, they're also like a VA loan where it said zero down. 100% financing. There is a funding fee that is financed into the loan. Like Diana was talking about, it can go to a 580 credit score with what's called a manual underwrite. What that means is we're not running it through an automated decision engine for an approval. An underwriter will manually go over the file and approve it. The seller can pay, like FHA, up to 6% seller concession, which is huge, not in this market, but when the market adjusts, again, one day, we will have that. Now, unlike VA, there also is a monthly premium fee that's part of the mortgage payment. And then a little story about my gotcha from, I would say probably 2003, where someone brought me a contract and said, we're gonna go USDA because the house next door has a barn and chickens, and it's out in the country. So I originate the loan at USDA, only to find out it's not USDA eligible. Just because it's in the country or there's a barn or chickens next door does not mean that it's a USDA loan.
There's a certain area.
If it's
Yeah.
deemed, like country. So it's very easy to determine. And now I do it and I have the realtors do it as well. But you just go onto the USDA website, very easy. You put in the address and it will automatically pop up and say if it's eligible or not. So I can't stress enough how that should be done before writing an offer or assuming you're going to do 100% financing. I haven't done that again since.
Okay.
Only one time.
Yep.
Okay, so we talked about conventional, VA, FHA, USDA, and then Elizabeth, you want to share with us some information about the state bond program.
Yes. Now, what we're talking about with the state bond program is down payment assistance. And the down payment assistance can be backed with every single one of these loans these lovely ladies have talked about here today. There are programs that have $10,000 available. There are programs that have $7,500. There are some grant programs that will give up to 5% of the loan amount towards the purchase or towards your down payment and your closing costs. Now, this is a great program, and the reason why I like this program so much, ladies, is the funds are generally always available. Unlike a lot of the city or the county down payment programs, they will run out of funds, and it doesn't limit your where you can shop. Florida bond program means exactly that, Florida. It means they will cover the entire state, so we don't have to worry about it being in a certain area or a certain city or county limits. They underwrite to our guidelines, which I like. A lot of the other down payment assistance
Yes.
programs have their own set of guidelines. They have their own set of ways they calculate income, where Florida bond underwrites to our guidelines. So I know that if I've reviewed the application, have taken a look at all their income information, that if I tell them they're going to get the money, we know for sure that they're going to get the money. We don't have to worry about that. So it can help your first-time home buyers if they don't have all the money that they need for down payment assistance. The rates are still reasonable. There are some extra fees that go with down payment assistance because, listen, ladies, money isn't free. So there are some downsides to it. But please reach out to us as professionals and we can go over the pros and the cons of using down payment assistance with each one of these types of loan programs.
And since you were mentioning that that is a down payment assistance program, and you also mentioned the fact that there are other programs, we recently found out about another down payment assistance program. But as you were talking about, it's not always there, so we always recommend, please get with us and find out what your options are so that you know the best programs for you. So our goal was to give first-time home buyers a bit of information to give you the luck of the Irish to get your offers through. We're hoping that gave you some great information today. But before you leave, be sure to like, subscribe, and share our episodes.
And make sure to follow us wherever you listen to your podcasts.
Please follow us on Facebook at Mortgage Chicks with Hot Tips.
If you have any questions or ideas for topics you'd like for us to discuss, please email us at mortgagechicks@vandykmortgage.com.
We want to wish you all a very happy St. Patrick's Day, and may the luck of the Irish be with you.
Happy St.
Happy
Patrick's Day.
St. Patrick's Day!